Legendary investor Charlie Munger, who passed away with a net worth of $2.6 billion, famously said, "The first $100,000 is a B, but you gotta do it. I don't care what you have to do. If it means walking everywhere and not eating anything that wasn't purchased with a coupon, find a way to get your hands on your first $100,000. After that, you can ease off on the gas a little bit." Earning your first $100,000 can feel impossible, but in today's video, I will show you how this can be reached quicker and why your net worth explodes and becomes much easier once you reach your first $100,000. Two rules which you need to know about investing money. The first rule you need to know is that capital scales well. You may wonder, now what does that mean? This means that the more money invested, the more money you would get in interest in return. Here's an example. Investing $1,000 into the stock market, returning 7% for the year, will return just $70 on interest after 1 year. For most people watching this video, this investment return would not really make a difference in their life. But instead of investing $1,000 for the year, had you invested $100,000 for the year at a 7% return rate, you'd be looking at a return of $7,000, which most people in the world could do a lot with. The interesting thing about the two examples I just shared is that both of these examples would face the same amount of risk had it been invested into an S&P 500 index fund. However, the more money you put into an investment, the higher the dollar returns are in terms of making a difference in your life. The second rule is that money rides momentum, similar to what a snowball effect is. A small snowball on top of a mountain rolling down will begin slowly. However, as it goes lower and lower down the mountain, it becomes bigger and faster while going down. Similarly, saving money can be viewed in the same way. When starting to save, it begins slowly, but once you invest more and more and more, interest comes into play and it allows you to rapidly grow your investment with more money and time. Have a look at these charts, which will paint a better picture as to why net worth grows like crazy after your first $100,000. Let's assume that you will invest $10,000 at the end of every year with a return of 10% per annum, which can easily be achieved in the long run in the S&P 500 index fund. It will take you a total of 7.27 years to get to your first $100,000 with yearly contributions of $10,000, in addition to the interest received in the prior years. Now, a common misconception is that people think that reaching $1 million will take you 10 times 7.27 years. But that's not true at all. With the power of interest, you end up reaching the $1 million mark much quicker. Let me explain a little bit more with the next chart. If you continue to invest $10,000 at the end of each year at a steady interest rate of 10% per annum, you will reach $200,000 in just an additional 4.26 years. Just by looking at the two charts which I just showed, it's clear to us that your first $100,000 takes the longest to achieve, but becomes quicker at each $100,000 increment. Now, before we move on to the next image, if you have liked this video so far and would like to see more of it in the future, then please consider liking the video and subscribing to my channel. Now, the next chart which I'm going to show you has a little bit more information on it, so let me explain through it. The three lines that you see, the orange line represents your yearly $10,000 investment, which is depicted by a straight line. The green line which you see is the interest you have received over the years, which is depicted by an exponential line, meaning that it is increasing at an exponential rate each year. And the blue line is the total of the yearly $10,000 investment and the interest received. Notice how after about 12 years, the interest made outperforms the yearly $10,000 contribution. This is why getting your first $100,000 as quickly as possible is critical, but more on that later. As you can see, to get to your first $500,000, it will take you a total of 18.8 years if you carry on investing $10,000 at the end of every year in an investment fund getting a return of 10% annually. To get to $900,000, it will take you a total of 24.16 years. Now here is where you see the true power of interest. To get from $900,000 to $1 million, your final $100,000 will take you just 1 year to achieve. So that's 7.27 years to get from $0 to $100,000 and 1 year from $900,000 to $1 million. The key thing to understand from this chart is that it gets much easier to increase your wealth after hitting your first $100,000. Now, as Charlie Munger said, getting your first 100k is the toughest part and that you should do anything to get to this number as quickly as possible. With this said, let's have a look at what we can do to reduce the 7.27 years on your first $100,000. During your younger years, you should make it a priority to cut out on unnecessary expenses, whether it's branded clothing, overpriced coffee, eating at a 5-star restaurant, or on nights out. Have a look at your bank balance and try seeing where you can cut out on certain expenses. Have a look at this image. You'll notice that in these 7.27 years, you have put in a total of just over $72,000 of your own capital. $10,000 each for the 7 years and $2,000 for the remaining 0.27 years. You will also notice that the interest earned in these 7.27 years only makes up about 27% of the total $100,000. Now let's have a look at the stats for earning the next $100,000. As you can see from this image, if you carry on investing a total of $10,000 at the end of every year and still get a return of 10% from your investment, you'll achieve your next $100,000 in just 4.26 years. That's more than 3 years quicker than your first $100,000. You'll notice that in these 11.53 years, which is the 7.27 years for the first 100,000 and 4.26 years for the next 100k, you have put in a total of just over $115,000 of your own capital. From this image, you will also notice that the interest earned in these 11.52 years makes up about 42% of the total $200,000 investment. A big improvement from the 27% during the first $100,000. From these two images, it is clear to us that in the first few years of investing, interest plays a much less of a role in growing your capital. Have a look at this image. If you invest an additional $5,000 per year, so a total of $15,000 per year, you could cut out nearly 2 years to make your first $100,000. Now, granted, an additional $5,000 is a lot to have, but the point I'm trying to make is that consider saving and investing as much money as you possibly can in your first 10 years. For those of you who are interested in playing around with this calculator, I will leave a link to it in the description box below. There are 3 things which you need to try to focus on in your first decade of investing. The first thing is that you should try to earn more money, whether this be that you work overtime at your current workplace, get another job with an increase, start a side hustle, trading, or even becoming a small content creator on YouTube. The second thing you should do is to spend less money and look to add what you have saved into your investment portfolio. Now, if you would like some additional help in trying to cut out on your expenses, then have a look at this video of mine where I speak about how I gave up buying these 8 things to save more money. I'll leave a link to the video on the cards above and in the description box below. The final thing which you should look to do is to be smart with your money. This involves putting money into the right place. Depending on the country you reside in, you could look to legally cut out on taxes. Such examples are investing into the 401k account, where employers can match the amount of money you contribute into it on a monthly basis. Another example is where you invest your short-term investments into a high-earning savings account. This will allow you to potentially have more than $10,000 at the end of the year at no extra effort at all, which you will use to invest into your main investment account. As the years go by, you can then afford to take the gas off and put a little bit less money into your investment account, as this is where interest takes over for you and does all the heavy lifting. This is exactly what Charlie Munger means from his quote, where the first $100,000 you should do anything to try to get to that amount as quickly as possible, so that it significantly reduces the amount of time it will take for you to become a millionaire. If you have liked this video, then you will like my next video about the 7 money habits keeping you poor. Like and subscribe for more.